On the occasion of Muhurat trading, I'm at NSE and I'm joined by MD and CEO of NSE, Ashish Chauhan. Thank you for joining us on a business today. Happy Diwali to you, sir.
Happy Diwali and Happy New Year to all the people who follow Vikram Samvat.
Sir, I want to start by asking you that, if we see the Samvat, the market has been range bound from 23,500 to 24,000. So how do you see do you see the consolidation going forth, or you see a momentum picking up in the coming year?
In a way, last entire Samvat has been fraught with many uncertainties because of the tariff war. Before that, it was the US elections, and then many wars across the world, and then Operation Sindoor and all. And so the market has been range bound over last 1 year. Nifty has given only 6.5% returns, which if you compare with FD, it is comparable. But if you compare it with other asset classes like gold or silver, it has given much lower returns. And of course, compared to the rest of the world, we have given lower returns in last 1 year. But if you take last 5 years, I think 3 years out of 5 years, we have been the best performing market in the world. And the last year, in a way, has been slightly sideways. The issues which came about in terms of the tariff wars and also overall slowdown because of a variety of reasons, I think are now slowly going away. Now we are almost reaching on Nifty 26,000, which is telling you that the all-time high is very close. In fact, 2 days back, we got the Bank Nifty reaching all-time high. And so it's going to be the next Samvat is going to be kind of coming with the newer hopes and the fact that some of the results of the geopolitical diplomacy are also going to be seen soon in probably November, December, when hopefully we will have some good news coming on the India-US tariff front, as well as the investments which have been made in the PLI framework on. We have become very large exporters of the telephones across the world, but also the chips, that is electronic chips manufacturing is going to come into full play in next Samvat, and many more things, including the fact that the services exports have been going up by 14.5-15% year on year is a good sign going forward. And GST reduction or GST reforms have given you a day yesterday where we delivered 125,000 cars in a single day to the consumers. I mean, I recall in my life days in 85, 87, when we were not making even 100,000 cars in a year. Now we are delivering 125,000 cars in a single day. And so you can see that manufacturing is going up overall. There is a good buoyancy going into the new year. That is a new Samvat.
You spoke about the market volatility. How do you see, is this a healthy correction or it is a sign of caution for the investors?
In a way, I have been associated with the markets for last almost 34 years, and I have seen many wars, and I have seen many changes in policies. I have seen the World Trade Center in US going down. I have seen .com bubble. I have seen COVID and global financial crisis, and each time India has come back in Nifty has a base of November 395. At that time it was 1,000. Now after 30 years it's 26,000, and if you take into account the dividends, it would be like 30,000. If you invest 1,000 rupees in Nifty in 95, today you will be holding at least 30,000 rupees. And India has grown average with all the ups and downs at 6.5% per annum over last 30 years. If India continues to grow at 6.5-7% over the next 30 years, it's going to grow even 30 times more. And that's what it's a simple arithmetic, and you can see how it's going to go going from. I mean, if you think India is going to grow, because on the back of technology and demographics, which are the two primary reasons why countries grow. Japan has become old, China has become old, Europe has become old, and America will become old if Indians don't go, right? So effectively, this is the only country which is going to grow faster over next 20, 30, 50 years. And that's why if you invest in long terms, you're going to be a sure shot winner going forward.
Talking about NSE's volume, they've been impressive last year. So what do you see in the investor behavior? What's changed and where do you see this going?
No, we have seen investors becoming a little more circumspect, but also they've moved away from derivatives, which is a good idea. And they've started going into longer term investments. Last year at this time, India was doing 20,000 crore rupees a month inflow in SIP, systematic investment plan. Now this this month we'll top 26,000 crore a month, including, and if you add the EPFO investments which are coming in every month, it's going to be probably close to 30,000 crore a month just out of the Indian investments. And that's where Indian investor has become more sanguine about India's growth prospect, and they've seen the stock market as a very trustworthy investments.
Also, the FII, outflows, have been, pacing up, especially this year in August, around 40,000 crore money was sold. So, how do you see this trend? Is it a short-term trend, or you see this is like a change in the preference of foreign investors?
In a way, FPIs look at many markets across the world, and sometimes if Indian markets are giving greater returns and other markets are actually going down, they try to sell in India to do the sort of a set off against the loss-making markets. And so they may have many other strategies, but largely speaking, many of these companies, the foreign investors, have invested into Indian companies very small amounts, and now many Indian large companies are coming for IPO. That time they are taking out large amounts, and that's why many of these trends have not yet been studied well. But broadly speaking, the foreigners are also coming back now for investing in Indian markets, and some of them will take some money out on a temporary basis. But again, the growth is here, and so many of them will start coming in. Like last week, you have seen the UAE bank taking over Bhatnagar Bank, RBL Limited, and so that's where you see many more of the large ticket items are going to come in going forward from abroad.
Any new innovations we can expect in NSE in derivatives, ETFs?
No, in a way, for me, the innovations have to be for the economy and not in instruments, because ultimately instruments, because we are a highly retail market, instruments have to be simple, stupid, rather than very complex. And that's where we try to come out with the new instruments which are easy to understand. Like we have got some great success in the electricity futures. We have also applied for interest rate futures on bond indexes going forward, and many other things which are easy to understand. And hopefully, if we get permissions, we should be able to see some bond index futures going forward.
When can we expect the NSE IPO? And what are the sector and the themes you see are feel could be the sunrise sectors?
In a way, NSE has been asking for a no objection certificate from SEBI so that we can prepare our draft red herring prospectus. That is going on for last almost 9 years. Hopefully, if we get the no objection certificate now, in next couple of months, it would take around 7-8 months more for us to prepare DRHP and also get the SEBI's approval to go ahead with our IPO. So probably sometime, say 7-8 months after we get the IPO, NOC for the IPO, we will be able to roll out our IPO.
Next year.
Absolutely.
And the sectors and the themes you feel could be sunrise sectors?
In a way, for me, services have been perennially good for India, and so it's going even faster pace at 14.5% increase, although many new companies may come into play because of the way the AI and other things are changing. And of course, the manufacturing has picked up because of the GST reforms. And defense sector has done exceedingly well, but I think across the world, defense is going to do better because of the way the features are coming forward. Overall, consumer sector is doing well because of the way India has reformed its GST and other things. So broadly speaking, these are sectors I have been watching, but naturally I don't invest in stocks. I'm not a fund manager, nor I'm allowed to even invest in a single stock. I invest through mutual funds only.
Lastly, your advice to the new investors who want to sort of participate in the equity markets?
And the new investors have to be very wary of too good to be true promises. So if something is too good to be true, it is too good to be true. And so don't go by the promises which people make of doubling, tripling your money. There is no surety of the returns on the stock markets. You need to understand very well. Buying in the morning and selling in the afternoon is not called investment. You need to stay invested for many years to get good returns. if you're not an expert, don't trade in derivatives.
That was quite a message. Thank you so much, Ashish Chauhan, for joining us in business today.